Investors, welcome back to Green Money Momentum. I'm your host, Trevor, and we are here for Tuesday's daily talk of stock. Today for June 23rd. As we could see on the heat map, we did have a pretty split day overall. We had 50% in the gaining category, 47% in the losing category, but our favorite sector of technology getting hit very hard today, with the leaders in technology, the semiconductor plays, having some of the biggest bleeds. So we could see here Nvidia had quite the drop, going below 5 trillion on the market cap. Once again, TSM got hit very hard. MU got hit very hard, down by 13%. Advanced Micro Devices getting hit, Intel getting hit, as well as Marvell and many different other stocks in the technology sector. A lot of fear, uncertainty, and doubt coming from the South Korean market, as we did see that their markets, their major indexes, plunged by nearly 10%. And we do know out in South Korea, it is the semiconductor plays such as TSMCI that is leading the way out in South Korea. We have a decent amount of fear in the markets in general, which may surprise some, as recently it does look like here in the short term we have had a resolution between Iran and the United States. We did see that signing from Iranian officials and our president at the G7. Just the other day, we had JD Vance out in Switzerland also talking with officials, and it does seem like right now it has been a resolution, but the U.S. wants to go in to Iran and just inspect that they don't have any nuclear weapons. So just as this article reads right here, Trump says Iran completely agreed to nuclear inspections, but Tehran denies any such plans. So the same back and forth that we have been getting with this situation. As I've been saying, it's like the carrot dangled above the public's head. One second, you're being told everything is great. The next second, you're being told that it's bombs away and everything is going to get worse. And now we have an interesting environment in the stock market, because for many months now, the president and the media has been able to use this situation out in the Middle East as leverage for the stock market, right? The president has been pumping and dumping the markets by saying we have a ceasefire, and now the ceasefire is off. So if this war really is done, this is interesting, because now we are kind of entering into a new cycle into the markets, and we'll need to be watching some other variables that may move the markets. And again, that is just if this war does actually come to a resolution. But again, I wouldn't be surprised if all of a sudden the ceasefire is off and the attacks continue to ensue. Also, this is not just the United States and Iran, but also Israel mixed in there as well. So a lot of tension overall. Wars don't typically end in a short matter of time. Typically, it takes many years before there is actually a true ceasefire, and then the tensions are over. And even then, tensions will always be there, because with war, there is destruction, there is death, and so much more. At least tensions when we talk about normal people in society like you or I. But when it comes to the biggest government officials, war is also great for the pockets, right? So war does generate a lot of money. So that's just something else to think about. Another reason why this may not actually be over here in the short term. But regardless of that, with all the news of the ceasefire back and forth, the markets have been rallying, right? When we look at the S&P and the triple Qs, it's really the talk of the first ceasefire that was supposed to happen here that gapped the markets up, and then we started to see this strong bullish trend. So now that the war is apparently over, some may be surprised, why are the markets not pumping? Why are the markets still feeling fearful? It's like we dragged down more today, now in higher levels of fear, getting closer to extreme fear. Why is the volatility index rising, right? When we look at the VIX, this just measures the volatility in the markets. We've started to see a pump within the VIX, which does worry some. And some are saying, why is this all happening? I thought the end of the war was going to be the beginning of a much bigger bull market. Also, oil is down. Another reason to think that, well, I would say that here in the short term, the markets are a bit fearful because of what recently happened at the meeting last Wednesday. That was the Federal Reserve's FOMC meeting where they, either cut or raise or keep it the same on the interest rates. And well, they kept the rate the same, but they also did appear a bit hawkish. We have our new federal chairman, Kevin Warsh, who many were expecting to cut rates right away because that is why Donald Trump picked him. Well, he can't directly say that, but that is what many of us hypothesize has happened, that Donald Trump wants Kevin Warsh because he should be more aligned with his views to cut, and print, baby, print. But now at this last meeting, it appears that Kevin Warsh and the Federal Reserve is continuing to remain on their stance of keeping the interest rates the same. And some feel that how the Fed appeared at this last meeting was hawkish, and now we may have some rate hikes going forward. The next meeting right now, there's a 36% chance that we do get a rate hike. This is in 35 days. In my personal belief, I don't believe that the Fed is going to hike at this next meeting or anytime soon. If hikes were in the books for this year, why would they not hike at this last meeting? I mean, the dual mandate of keeping stable prices and maximizing employment currently is not being met. And if they are spooked about the, higher than normal inflation, I would say, why not hike the rates right now if those are the concerns? And I believe that is because the Federal Reserve does not want to destroy what we have going on, and that is the castle in the sky. So many bears online want to see rate hikes, or they think that the Federal Reserve will do rate hikes, but I don't think that that makes any sense. Also, disclaimer, this is just my opinion, never financial advice, but with the Federal Reserve, why would they actually hike rates? If we do look at the economy, it is actually really weak right now. We have had very low GDP. We do have strong inflation. And then also right now, we do have a strong labor market, right? We do have a labor market that is beating expectations, at least how the government statistics are being reported, right? So I'm talking about all of this in the world of government statistics. In reality, inflation a lot higher than they report, and the labor market a lot worse than they report. But here with the government statistics, we are seeing a strong labor market and high inflation, but that is not a good combo. The labor market may be looking strong because many people in the economy need to get jobs because of how tough things are right now. I mean, if we look at the average age of a home buyer right now, it is about 40 years old, right? So there are many who are being affected by this inflation. The housing market has been elevated. We have a lot in the economy that is struggling. If the Fed decides to hike rates, that will make everything much worse, right? The monetary supply and the rate where it currently is so messed up because of years and years and years of the Federal Reserve keeping the rates artificially low and printing a ton of money. So I don't see there being a reversal. We do have this new chairman. If Kevin Warsh really does want to fix the economy in those ways, it is a possibility. I'm not completely ruling it out, but if we just look at what the Federal Reserve has done for many years over the last, 3 decades, I just don't see the Federal Reserve hiking on the rates. I mean, if we look at the most recent of, crises and crashes, 2020 and 2008 being the two most significant, it was during these times when the Federal Reserve really dropped the rates. And so when we do look at the economy and everything that is going on right now, and the stock market, it is booms and busts created by the Federal Reserve. And it has always been this way. And if the Fed hikes and they know this, they will really cause a lot of pain. And the economy does go a lot off of the castle in the sky type mentality, keeping the rates low and keeping, a lot of borrowing happening within the economy. So there is a lot of fear about this. Again, I think the Fed is bluffing. I don't think there is going to be a rate hike anytime soon. I still believe there could be more cuts here in 2026, but all of this is important here in the short term because on Thursday we do have numbers for both of the Fed's dual mandate, that is the labor market and also inflation. We have the PCE numbers on a Thursday, which is the Fed's preferred measurement for inflation. So likely these numbers will come in hot. And if they do, which they most likely will, I could see the markets having a bit of a tough time because of this. But, the markets are always unpredictable. There is anything that can happen. So for my sentiment for this week, I am just a bit unsure with us being in a level of fear, with the VIX looking a bit elevated and with those numbers on a Thursday. But overall, I do believe that does present a lot of opportunity. And I have been buying the dip. I was just buying the dip today. So I have been buying the dip, and I remain on my bullish stance for the markets, that I am very bullish for the second half of the year. Here in the short term, there may be some fear. It does appear that may be happening. But again, with blood comes opportunities. So overall, I'm very excited. With that being said, now we will talk about some different sectors within the markets. And so we'll start out the stock discussion with the sector of semiconductors, as semiconductors have looked super bullish now for most of 2025, all of 2026, and it does look like the momentum may be continuing. We did have a hard pullback within semiconductors today, quite the red day because of the fear out in South Korea, but this sector is looking very bullish overall, and I do believe that this presents opportunity. Now, I'm not talking about the very next candlestick. We may continue to see some blood within the markets, including in semiconductor plays, but overall, I do believe that this bullish momentum will continue, and for a great reason, because when we talk about semiconductor plays and we talk about supply and demand, there is so much demand for all of these chips because they are really powering our future, which has a lot to do with computing, artificial intelligence, all these data centers, and so on and so on. So there's so much value behind these chips, and these companies are really leading the markets. Of course, we have NVIDIA as the #1 company in the world with a 5T on the MC. Well, slightly underneath it right now, slightly underneath 5 trillion on the market cap, but pretty close, just a bit of bleeding today that pushed it slightly under that, but the #1 company in the world, and they aren't the only top 10 company in the world when it comes to market cap that is in this sector of semiconductors. We also have TSMC, so Taiwan Semiconductors. They are #6 in terms of market cap, and we just recently saw Micron get to 1 trillion on the market cap in record time, with advanced micro devices getting very close right now at about 900 billion on the market cap. So this sector is very strong overall. I do believe this is a situation where the trend is your friend, and I do believe that the sector will continue to be bullish through the rest of 2026. Now, again, here in the short term, there may be some more fear, uncertainty, and doubt. There is the possibility that we do bleed some more within this sector and the overall market, but I do believe that we are going to go a lot higher, especially at some point if the Fed does appear more dovish. If that does happen, especially at the next FOMC meeting, the markets could be going crazy. And again, this is the sector that is really leading in technology. So very bullish when it comes to the semiconductor plays overall. We have this major index. If you don't know exactly, which semiconductor play that you want to be a part of, if you don't know whether it's NVIDIA or Advanced Micro Devices or Marvell, if you don't want to be selective, you could also go to the major indexes of SMH, which always makes me laugh because it sounds like SMH in terms of internet culture. Shake my head, but look at this right here. This has been super bullish. I have been investing and trading within SMH, and there's also this new semiconductor play, which is also a bit around photonics, just recently came out to the markets. I don't currently have a position on this, but this is EUV, and this is Corgi Lithography and Semiconductors Photonics ETF. I just talked about this in yesterday's video, so if you want more extensive coverage, go back to yesterday's video, and in that video, I do talk about the allocated holdings within this major index, but I am bullish on both SMH and EUV. Now, I want to talk about a sector that right now I have not been as bullish on. And if you know my stance with cryptocurrency, I do like the investments in cryptocurrency, like some of the companies that invest into cryptocurrency having Bitcoin as a reserve on their balance sheet. I think that the asset is decent overall, but I haven't really been in crypto since 2024. And I'm happy that I've missed out on all of this blood, because when we talk about the entire crypto sector, Bitcoin, Solana, Ethereum, Litecoin, XRP, all of the biggest cryptos, there has been so much bleeding in the sector for all of 2025 for the most part, and then also 2026. In 2025, it's funny, we had what was appearing to be a bullish year, and then it got absolutely smashed by the end of the year. And this year, the pain has ensued. Recently, we have seen a lower high created on a Bitcoin and what appears to be another bear flag. And now we are at this level of support / resistance right around 60,000. And if Bitcoin does bear flag once again, if we don't see a recovery and this indeed ends up being a higher low, or we get another higher low, this could be very ugly for the sector altogether. We have seen a lot of delays when it comes to the big bill out in Washington for cryptocurrency, and that's going to be big for stable coins altogether. More legal clarity around the crypto sector. And I just got thinking about this the other day, with the weakness within cryptocurrency, I wonder if this bill could even hurt plays such as a Bitcoin, Solana, all these other major cryptos, right? It's great for the legal clarity when it comes to stable coins, but this could hurt these underlying cryptos like Bitcoin, Solana, and so on, because a big reason why so many were so bullish on cryptocurrency for a long time is because there wasn't involvement from the government within crypto, at least as we were being told, right? This was supposed to be decentralized finance. Now the government really has their hands within cryptocurrency. We have the crypto reserves in the White House, and also with cryptocurrency, unfortunately, there has been what I call some bad actors within the space. A lot of companies that have opened reserve companies and then continuously diluted on investors. There is a list of a ton of companies that have done that. One that I could think about is ETHZilla. This is an Ethereum company. Wow, it doesn't even look like it's on the markets anymore. It got delisted. This is something we have seen with other crypto reserve companies as well. That is crazy to see, but it was ETHZilla, which was a reserve for Ethereum. We've also seen other ones such as BMNR have a hard bleed. And then the worst for the sector, it at first looked very positive for the sector, but now looking pretty ugly overall. That is MSTR. And I got out of the way with this play quite a while ago. It's funny, it actually shows my line here. When MSTR broke under this right here, I stopped involving myself with this play. This is MicroStrategy, or now known as Strategy, which has been bleeding like crazy. And this is a very interesting situation here, because with MSTR and how everything is set up with the other derivatives that they have, the other funds that MSTR has created, Stretch and Strike, the funds that are supposed to pay out investors with the holdings from Bitcoin, the capital appreciation. Well, we've had to see a lot of dilution within MSTR, and the whole plan appears to be breaking right in front of our eyes. So we may be seeing something historic here, with possibly another scheme falling in MSTR, and it may be the big players bleeding on the big player, because MicroStrategy, or I should say Strategy, Michael Saylor's whole strategy with this is buy Bitcoin, hold Bitcoin, and continue to buy and hold, not sell any Bitcoin. Let there be capital appreciation. But we've seen a crazy bleed within Bitcoin, and now most recently, Michael Saylor has become Michael Seller, selling some of his Bitcoin, which looks terrible for the space, because with cryptocurrency, there is so much about tag along with me. If I'm buying Bitcoin, you should too. Sell your house for Bitcoin. Michael Saylor talked about how Bitcoin is like Manhattan real estate. You don't want to sell it. And now we are seeing some selling on the Bitcoin. They still hold a ton on their balance sheet, but if the pressure continues with cryptocurrency, we could continue to see the floor get blown out, because I would argue with Bitcoin where it is currently elevated at 62,000. What's very ugly about this situation is if there is continued pressure on Bitcoin, if we see another bear flag, well, this will only put more pressure on Bitcoin's biggest holder, which is Michael Saylor and Strategy, and they hold a lot of the float. So if there's a lot of selling going on in general in the crypto space, and then Michael Saylor starts to get liquidated, that could be very ugly for Bitcoin and MSTR. And of course, the whole sector runs in quite a bit of correlation. So not only would Bitcoin be getting torn up, but so would Ethereum. And that means BMNR would be getting torn up right alongside it. And that would also include the, Tom Lee. He is a representative at Bitmine Immersion. So overall, the sector of crypto has been looking very weak in general. And, there are reasons to be bullish for cryptocurrency and also reasons to be bearish. But what's so interesting about what is happening with the stablecoin, the stablecoin bill out in Washington, I could actually see this being a negative for cryptocurrency and, crypto kind of being in a big bubble altogether. Could you imagine if we do see that Clarity Act get passed and now we have more financial regulation than ever when it comes to the crypto space, and we see the major cryptos that aren't backed by stablecoins such as Bitcoin have a bleed off? It would be like we are going into the digital society that we've all seen for so long when it comes to currency, but just not in the way that we thought, right? Like US dollar coin will become fully legit. We'll have real backing with the US Treasury bills, everything like that. But these plays such as Bitcoin, this is where maybe Peter Schiff's argument is correct on Bitcoin. And I know some don't want to hear that. Some are hodl forever with BTC, but it could be a situation where now that this is not backed, is there really much intrinsic value with Bitcoin? I still think there's a lot of value with it, how you could transfer from peer to peer. And what is still great about Bitcoin or other cryptocurrencies is you could, trade out of your, government paper to say your whatever currency that you are in. We've seen currencies collapse before, and then if someone was able to get into Bitcoin or Solana or one of these cryptocurrencies, they could hedge against that against that pain on their currency, right? The hyperinflation or whatnot. But again, overall, it's very interesting, a very volatile sector, and not looking good here in the short term. I could totally see another bear flag possibly coming and Bitcoin dropping all the way to 50,000. We'll just have to see. Some may think this is a buy the dip opportunity, and maybe it will be a buy the dip opportunity if we see the Fed want to cut rates later this year, if we see them more dovish. But I don't see, if there's not a dovish Fed here anytime in the short term, I don't see any type of a big pump within the crypto space. Which now brings us into our third sector that we are going to talk about today, talking about the cryptocurrencies and Peter Schiff. If you follow Peter Schiff, you know that he is not a big fan of crypto, but he is a big fan of gold and silver. He's a fan of the hard metals. And if we talk about gold and silver, it has been quite the wild ride. We have the gold futures here on the screen, and you could see with the hard metals, it was super bullish to finish out 2025, leading into 2026. We saw some very euphoric movements within the hard metals, but then to begin February, we have been seeing bleeding ever since. So 2026 has not been a good year for the metals, which is unfortunate to anybody who did invest at the end of 2025, because again, it went from euphoria straight to a dump. So a real pump and dump. Now gold is currently sitting under the 200-day moving average, been shot on the relative strength index, and also on the MACD, we have seen dissension. So gold is getting closer to being at 4,000, which is crazy because at one point it was well above 5,000. And so there is gold there, and then also silver getting shot. Silver has dropped by about 50%. At the peak, silver reached 120, now currently at 61, also currently under the 200-day moving average. Very interesting to see the hard metals bleeding so much. When it comes to the hard metals, this is a sector that I have just a little bit in. I am mainly in technology, but I do like to diversify a bit across the board, and I do personally currently have some silver myself, but really I look at it as kind of a low yield savings account. And so with the hard metals being shot, gold down by about 20% from the highs and silver down by about 50% from the highs, I do consider these to be some great investment opportunities for the long term. Again, thinking about it kind of like a savings account. I'm not expecting anything crazy in the short term, not expecting some type of massive squeeze, but just a hedge for my portfolio, just some diversification. Of course, there are other metals that you could invest into as well. You have copper, you have platinum, and so much more. Just like there are a million different assets across the market, whether you are investing into stocks or crypto. So I would be curious to hear what you are investing into. Are you investing into any of the sectors that we talked about today? Are there any individual stocks that you are looking at? Are you bullish or bearish on the markets? I always love to hear your opinions. So please drop that comment down below. Please leave a like and please subscribe to the channel if you aren't already. I thank you all so much for your viewership, and I will see you all in the next Daily Talk of Stock.